morning, Tim. How are you?
I'm very well, Khutso. Good to be on air with you.
Oh, man.
The elections are now over, and now we are back to the world of investing and getting on with our lives and building the country. So really happy about that.
I'm excited to have you. And also, the breakers, you listening right now, what question do you have for Tim Akinnusi, becoming a property investor? Perhaps maybe a thought that you're having, a journey that you're going through, and what are the issues you are currently facing as a developing property investor? So, Tim, let's start here. For those who might be wondering what makes property a solid investment choice, why is it the solid choice to go with?
Well, it's a solid choice to go with because, like they always say, they're not making any more land, right? So land is a scarcity, and we always are going to need a place to either live in, rent in, a mall to walk in, a space to engage, And so property, be it commercial or residential, is always going to be a big part of our lives. So it makes it a worthwhile asset, and those who have figured out how to navigate it have made a fortune, and those who have figured out how to understand it and its various aspects have really done well for themselves, because it's not like you say, oh, this is not a gold or any other thing that kind of goes out of fashion. I mean, it's in our everyday lives, and I think that's what makes it very exciting, and that's what makes it very accessible to everybody as well. The fact that it's a part of our everyday life.
100%. Tim, let's get into defining what being a property investor entails exactly. I feel like I'm looking at one right now. You're talking about an industry and space that is making a lot of money. I'm looking at money right now. Tell us more of what it entails.
Right. So, if you want to consider yourself a property investor, right, then it's important that you're engaged in these key 4 activities, right? Number 1, you have to be engaged in research as to where you want to make this investment, right? What is happening in that local area? Are there new schools being built? Is there new development happening? Is it decaying? You need to also understand the historical trends around selling in that space, if it's in the residential area. So your market research and market intelligence is something you have to be engaged in. Then number 2, you also have to have a very clear strategy. So are you investing for the long term? Are you looking to flip this house? Or what is your strategy? What do you want to get out of this? What sort of returns are you looking to make at the end of the day? Then thirdly, you have to be engaged in the finance aspect of it. So there's a myth I also want to bust today, and a couple of myths. If you could allow me to bust some of these myths.
Let's go.
I think the first one is this idea that you don't need money to invest in property. You need money. You need money, or at least you need access to money. And one of the things that gives you access to money is having a really good credit score and having a really good rapport with creditors, because you're going to have to leverage debt in property.
How is the credit score looking like from a South Africa's perspective, especially when you say you need money to invest?
Right. So right now, obviously, the economy has been in a very challenging space, right? People are under pressure. Interest rates have peaked at, a high of, is it 11.75?
Correct. Yes. Yes.
So at this point in time, right, individuals who have not kept their credit score in a great space, hasn't made consistent repayments on existing credit debt, will find themselves in a challenging space when it comes to raising money for that property investment that you make. But the ones who have, right, the banks are going to want to be all over you. They're going to want to give you the debt because you've demonstrated that you've been able to maintain and manage your credit history and repayments over a long period of time. So they are likely to fund you, and you need that debt because the equity is expensive, and equity is literally your cash that you put into it, right? You want to hang on to as much cash as possible and leverage as much bank debt as possible. And so having a good credit score allows you to do that with ease, right? And then the last important activity you have to be engaged in is you have to have a team or a network of professionals, right? Because property is going to require you to engage with different professionals, attorneys. So you have to have a really good attorney who's going to transfer the property into your name, who's going to be able to register the new property or bond over it. You also need a mortgage broker as well, who's going to help you negotiate with all the banks to get the right or the best rate. You also need a team of contractors, right? Because if you're going to buy property, you want to check it out. You want to make sure that the plumbing is right, that you can get an electricity certificate. And then if you want to make repairs to the place as well, you also want to do that at a very minimal cost, because that would then maximize your return on that. And so having those professionals around you and that team of professionals, if you're engaged in, number one, knowing your finances, having that team, having a clear strategy and doing the research, you can consider yourself a property investor.
Man, it sounds easy. It sounds very easy and enticing, but that's why we're having this conversation, how to become a property investor. Joining us in studio is Tim Akinnusi. And of course, if you have any questions regarding the conversation that we have, property investors, and what are the issues you are currently facing as a developing property investor, please take this moment, this time, to send us your voice note on X. We're at MetroFM SA and Khutso Theledi. That number to send us a voice note is 060-552-7303. Let's hear your journey. Maybe the steps of research, clear strategy, engaged in financial, part of this. Maybe you've missed a few steps. Let's talk about it. Before we go for a bit of a song here, Tim, I'm just going to ask you to just break down again. You mentioned flipping houses. Let's go through it. Buying or buy and holds, rental properties, flipping houses, property syndication. Can we just go through those ones and the most important one that you feel is a shining star?
Yeah. So those are all different types of strategies, right? Some of those are more long-term. So buy and hold, that's a long-term strategy. So you're effectively saying you have done some market intelligence and somebody has told you that, listen, there's an area here that is developing. The mall is going to go up in 3 years' time. So therefore, now you want to buy land in that area. You want to buy it and hold it because that mall coming in is going to increase the value of that land. So that buy and hold strategy works in that context,
Nice.
right? In the context of like flipping a house, right, which is more short term, you are probably buying property that is in distress, so you know that you can get it at 30% of its market, lower than its market value, and then you know that you can also fix it up for a minimal cost that would allow you to resell it at a market value that is higher than what you paid for it, and that's how you then make a return on that investment. So buy and hold, more long-term, flipping, more short-term, and both of them are going to require you to have done your homework. And of course, in both instances, you need money. When you buy and hold, you obviously need to outlay some capital and to hold that, and also to maintain the place as well. And so you can never get away from those core activities that I spoke about earlier, regardless of what your investment strategy is.
Ladies and gentlemen, we're going to leave it here, right? Talking about how to become a property investor. This conversation will be up on our website. That's www.metrofm.co.za. In closing, Tim, what role does property management play in maintaining and maximizing the value of investment properties? And then we'll leave it there.
Yeah, so property management, that will talk to when you've had now all of your properties that have been rented out.
Sure.
And effectively, you've got to manage it and maintain that so that you get the right cash flow coming out of it. The best properties are the ones that generate high cash flow, predictable, low cost of maintenance, and appreciate over time. So, yeah, that would be the role of the property management in that context. Yeah.
All right, let's leave it there. Ladies and gentlemen, Tim Akinnusi, thank you very much for joining us